line with our strategy, in line with our key therapy areas, and obviously with due financial discipline, depending on the stage of it, whether that's IR, NPV, or for the later stuff, CFROI. So a lot of focus there. I mean, just if you think about it, even in the first quarter, obviously we've made some moves in oncology, but in this quarter we contributed 1.3 billion from the business development partnership with Vir. We went into the clinic actually with our 2 CureVac mRNA unmodified assets, both on flu and on COVID, and we'll come in later with the others. And we've seen all the progress we're making on 2 drug regimens, and super excited, hopefully later in the year, to see some first data out on the combos with Halozyme and BD. So yes, we will continue to do more, including in sort of structured partnerships, and that obviously is one of the benefits, the strategic benefits of the deep merger, is the continued strengthening of our balance sheet to do so, but with all due discipline. Hal, is there anything that you want to comment on in terms of data plans when the results come in on RSV?
Well, I mean, we're looking forward to completing the study and getting the data, interpreting the data, and ideally sharing the data externally, the headline data like we typically do. But it's often a case-by-case basis, and we're going to have to take a look at all that before deciding exactly what goes in the press release, typically.
Thanks. Next question, please.
The next question is coming from the line of Peter Welford from Jefferies. Please go ahead, sir.
Hi, thanks. 2 fairly quick ones. Firstly, just on older adult RSV rather. Just again, just following up on the timing of the data, given what we see with the RSV cases, which are now significantly coming down to almost 0, I think in both Europe and the US. Can you just confirm, have you got all the events you need for the analysis already, and now it's just a case of analysis? Or are you still actually waiting for some of the events to occur? And I guess how should we think about in regards to your confidence then of getting the readout into Q? And then just one, which I think is probably more consumer than anything else, but just regards to Russia and Ukraine. There was a comment about there were some provisions taken in the quarter. Can you just talk, what was the impact, if any, on the consumer margin? I guess I'm thinking, was that a factor that we should consider actually that was potentially a negative on the margin this quarter? Given I think the consumer business is more extensively exposed to Russia than perhaps Glaxo is. And perhaps you could just talk a little bit about cash collection as well, please, in Russia particularly, and whether or not you've had to take or have seen any decreases in the ability to get cash collection at all so far. Thank you.
Great, thanks. Well, lots of detail on the questions on Russia, which I'll ask Ian to cover. I mean, it's one for the group and slightly more for consumer than GSK, but I wouldn't make that too wide a difference. And Ian will comment on that. Hal, just anything to add at all on the older adult trial?
No, of course, these are, as you know, these are event-driven analyses, but we remain on track, as we've said, to read out by the end of Q2.
Right, thanks. Ian?
Thanks, Emma. Thanks for the question, Peter. So on Russia, for GSK, if you like, Biopharma, new GSK, less than 1% revenues, less than 1% adjusted operating profit. In terms of provisions in the quarter, consequently, you can imagine that they bear no relevance from a materiality perspective. The vast majority of our receivables in Russia are insured and subject absolutely to our compliance with any sanctions. At least the willingness to continue to pay the bills is coming through clearly from customers, whilst recognising the continued reshaping and prioritisation of the businesses, both from a biopharma and from a consumer healthcare perspective. And the data that I've shared and the facts I've shared is equally true across both consumer and GSK. So at this stage in the proceedings, well covered from an insurance perspective, willingness of customers to the extent they can pay with clear compliance with sanctions still very, very clear. And to the extent that we've taken provisions in the quarter, they are not material either for GSK or for Haleon.
Thank you. Next question, please.
The next question is coming from the line of Ian Simpson from Barclays. Please go ahead, sir.
Thank you very much. A couple of questions from me, if I may. I mean, I understand that you've made the point about tough comps in the second half of this year. But if I look back to the performance in 2020 and try and think about the 2-year stack and where you sit versus pre-pandemic levels, the comps aren't all that tougher. They're a couple of percent tougher, maybe, for the full year versus the Q1, and you've clearly had a very strong Q1 print. So I'm just trying to think about your guidance of being sort of between 4 and 6% for the full year. Is there an element of you just wanting to be conservative there, given how limited visibility is and how much we've seen things change globally in the last few months? And then my second question, when I think about your margin, again, clearly a strong start to the year, but how should I think about the phasing of that standalone cost building as we go through the year? You've said you've done some systems transfer, but at what point does that standalone cost really start to kick in? Thank you very much.
Right, well, both questions for Brian. Just as a reminder, it is only Q1 in terms of outlook for the year from our perspective. But Brian, do you want to comment?
Yeah, absolutely. Thanks, Ian. And again, I just want to reinforce, I do feel very good about our start of the year and the performance, given the organic sales growth, pretty broad-based across category regions and across power brands. And I talked about the 2% forward buy and the impact of cold and flu. It's early in the year, and we are managing through a very uncertain geopolitical and macroeconomic environment. So, like I said, I'm very confident in our 4 to 6% guidance for the year, but at this point, I think it'd be premature to say anything else. On your comps, it is quarter by quarter, can be up and down, as we know. If you think, 2 years ago in Q1, we were at 14%. Last year, -9%. This year, +16%. And that's a bit of the up and down in cold and flu and the forward buys. And if we look at the back half, what we know in Q4 is we had a cold and flu season that was similar to what we're seeing in Q1 of this year. And that's where my comment on the comps really come from. On the margin, again, strong start to the year, and feel good about how we've been able to navigate a very tough economic environment. But as I said, the 175 to 200 million of costs to run Haleon as an independent company aren't fully ramped up. They're getting more ramped up in Q2, and then as we become an independent company, you expect us to be pretty much fully in place. But as we think about the back half, and again, nothing's changed from the building blocks we shared at Capital Markets Day for 2022 or in the medium term guidance of moderate margin expansion.
Fantastic. So obviously we're all looking forward to the next steps in the deployment ahead of the
Waterfield.
Next question, please. I think we have time for one more.
Question is coming from the line of Mike Purcell from Morgan Stanley. Please go ahead, sir.
Yeah, thanks very much. Just going back to 2 topics. Firstly, on RSV, could you help us understand what would be considered a positive readout from the Arrow 6 trial? J&J have set a benchmark, I guess, with the Cyprus data. So is that what we should be thinking about? Otherwise, what sort of benchmark should we be thinking about? And then sort of secondly, on Shingrix, in follow-up to Tim's question, where are we at the moment in Germany relative to the US in terms of uptake? And how should we think about the progress of other ex-US countries compared to Germany, maybe using that as a proxy? Luke, you talked to how you felt that you captured the European market in 5 years. So just trying to understand the progress there and where we are with upgrades, such as the liquid formulation and looking at trials in immunocompromised adults above 18 years of age as well to build the market further.
Okay, great. So, Hal, to you first, please, just quickly on RSV trial data, and then Luke, over to you, please.
Yeah, thanks, Mike, for the question. As we've said previously, it's both hard to predict efficacy and it's hard to predict efficacy relative to competitors without any data. But as we look at our own immunogenicity data, the aggregate packages that have been presented by other companies, I think we have, and I should say, in discussions with clinicians, we're pretty confident that effects that are more than 50% are probably clinically meaningful. An effect greater than 70% is a very good response, and it'll be, we think, a very successful vaccine. And should we get efficacy above 80, that's truly outstanding.
Right, Luke?
Sure. So, Mark, I mean, if you look at Germany, it's about 133 of the 160. And I mean, we're at early stages with Germany. I think what's attractive about Germany is you've got heavy levels of support from the SIC funds. So there's not a high out-of-pocket exposure. Now, that varies across the rest of Europe. Some countries have concentrated on the immunocompromised for reimbursement. Other countries have got a cut-off in terms of age. So it's going to be more staged with those markets. And then if you look beyond Europe, we've seen a good uptake in Canada. We're just starting to get going in Australia. We'll launch in Brazil later this year, and markets like Saudi we expect to pick up. Again, the strategy is in the initial out-of-pocket segment at a consistent price globally, and then we'll go to tiers and tenders later in the life cycle of the product. So very much starting out. And in China, finally, it's very much on hold right now because all vaccinations in China have to occur through points of vaccinations which are run by the government. And of course, right now they're heavily focused on COVID vaccines, as well as the restrictions that people have in China right now.
Right, thanks. And one last question, please. Feel free on HIV.
And our last question is coming from the line of Simon Baker from Redburn. Please go ahead, sir.
Thank you very much for squeezing me in. Two questions. Firstly, one for Brian on oral health. It's an important driver because historically it's grown above the 4 to 6 growth rate that you've been targeting. So I just wonder if you could provide us with some colour on how the market's evolving and your share within it, and any innovations you're pursuing within Sensodyne to continue that growth. And then a question for Hal, touching on something you mentioned. You talked about dostarlimab, CD96 antagonist and TIGIT, and you do have a phase 1 study trying those in triple combination, which I saw was expanded and delayed last week. The trial's been expanded. It's been pushed out about 18 months to August 2024. So any colour you could give us on the reason for the expansion and the delay would be great. Thanks so much.
Thanks. Right, well, so Hal, let's come first to you, and then we can fittingly finish with the question.
Well, thanks for the question. We're very excited about our immuno-oncology portfolio. We think the CD226 axis, highlighted by TIGIT, but also complemented by CD96, and as I mentioned earlier, the addition of PVRIG is an exciting opportunity for GSK to be leaders in this new area of immuno-oncology, should it end up being successful. The programs are challenging to develop both TIGIT monotherapy, TIGIT combination, identifying doses for both of those, adding in CD96 with dostarlimab, adding CD96 with a triplet. So these studies are all quite complicated to find doses and whatnot. So the expansion of the trials are really to highlight the ability to find the right dose, make sure they're safe, and look for efficacy signals. And we're doing that across different tumor types. So it's a very robust program, but we're going to have to enroll a number of patients before we get the answers to the triplet combination.
Thanks. And Brian, on oral health?
Yeah, thanks for the question. So first of all, really good performance in oral health in Q1. We grew 9% versus a year ago. And it was really strength across all of our 3 main brands. High single-digit growth on Sensodyne, double-digit growth on Parodontax, double-digit growth on denture care, which has a bit of a rebound from softer consumption in the pandemic. Importantly, we grew share on all 3 of those brands on a global basis. From an innovation perspective, we launched Sensodyne Nourish in the U.S. and are beginning to roll that out. And Sensodyne Nourish is still providing the sensitivity benefits, but also has herbal ingredients. It's in recycled toothpaste tubes and packaging, and is attracting a younger consumer base into the franchise. Early days, but we're encouraged by where that will take us. So, feel very good about our oral care franchise and the way the year started.
Great. So thank you, everybody, for the call. Obviously, a strong start to this landmark year for GSK, and we're now very excited to be in the final stages of the plan to demerge consumer and create 2 companies with new chapters for growth. It's wonderful to see good momentum across the business. recognizing, phasing patterns, the underlying strength is very much there, and we remain all extremely focused on maximizing shareholder value, patient impact, and building businesses with people that can thrive. Thank you very much. We look forward to speaking to you all soon in
All right.
the coming days and weeks.
Hello, YouTube. Hello, Twitch. Thanks for showing up. Let me see. Sorry, I've been neglecting you guys in Twitch. Try to keep this up, but it takes too much of my screen. I'm gonna throw up another monitor. I can't order an outfit because I have to. Yeah, let's take that offline. I'm just gonna get a suit from my an old suit for my business meetings. Should I switch out of League of Legends? Alright, sorry. Let's see here. Creator dashboard, stream insights. I don't even know what's going on. I still have 147 viewers. Thanks for being here, everyone. Really appreciate it. Let's see. Finance? FinTwit? Is that a thing? Stock market? Stocks and bonds. Hey! That's a game, though, isn't it? What do you guys suggest? Stocks and bonds? Can I tag it? Think just chatting would be better? Let's see. I want to see if my friend is streaming the other FinTwitch, some other guys on FinTwitch. I see a lot of babes. I don't want to get distracted by this stuff. I'll never invest again. Yeah, I'm looking for my friend Rob. It's funny, I'm a subscriber. I think I'm a subscriber of his. Yeah, let me click following. No channels live. Okay, fair enough. Well, who am I following in general? This thing is so confusing. Subscriptions. There we go. There we go. Rob Maxwell. He's offline, but this is a really great sub. If anybody wants to join, and I'd be happy to gift you a sub to Rob Maxwell, who's a professional investor, really sophisticated, maybe more sophisticated than me. But nobody watches him because people want to be entertained. They don't want to actually learn and make money. Or some people. I know you guys are different, but Rob's an actual Wall Street professional, whereas, with Real Network, I used to know a lot of people, well, let's just say a lot of different billionaires in hedge funds, and Rob knows a lot of the same people. So we had, I met him many years ago on Wall Street, and I'm shocked that he's, streaming, but he said something very smart, which is that these days content is something that everybody's doing. It's really not like it would have been really weird years ago, and it's still a little weird now for a Wall Street professional to be streaming, but it's the way of the future, And so many people, in fact, I was ridiculed when I was on Twitter years ago as a CEO. Now every CEO has to be on Twitter. So it's such a just a funny dynamic, you know, for the old guard. These kind of like old fogies on boards of directors think. The trading challenge starts on Monday, so I'm just kind of tuning up a little bit for it, making sure my stuff's working and stuff like that. What do these guys have? All right, shareholders' equity, other long-term liabilities, lease. Okay, that's Microsoft for you. $1.8 billion enterprise value. If you guys don't understand the concept of enterprise value, then I'm not even sure who downtown Josh Brown is, but what was I going to say? Yeah, if you don't understand the concept of enterprise value, you should look it up. Maybe I'll make a video about it. I used to have some videos about that. I think you can still find them. But I might make like a more concise video about enterprise value. So if you look at Microsoft's net income, they're in 16.7 billion. 16.7 billion last quarter. So in a year, right, I'm just going to multiply by 4. That's 67 billion. All right, well, I'm going to take the enterprise value and divide by 67 billion, and I get 27 times earnings. Not very cheap, normally speaking, but it's growing at 18%, which is pretty fast revenue growth. So that's actually not bad, not a bad multiple for that kind of revenue growth. Not bad at all, as a matter of fact. It's kind of a bargain, to be honest. But the question is, will revenue growth slow or drop or whatever? So let's continue reading the press release, and here you have cash flow, and let's see how Microsoft's cash flow differs from their income statement. And that's a bit of a tricky thing. So we're going to do model net income and then reported net income and stuff like that. But the basic difference between the income statement, which is up here where they made 16.7 billion, and the cash flow statement, so, is taking away some of these non-cash items. And we get an understanding of actually how much cash they made on a pure basis, as opposed to cash, let's say, on a accounting basis, which is very different. Often different, not always that different, but it's often different. And especially in software, it can be quite different depending on the situation. So let's take a look. And we can see, of course you can just look at the bottom, but we can see that the cash flow from operations was substantially larger, right? Substantially larger than the net income. But there's a trick to that, and we're going to look at that in a minute. Okay. For taxes, and then what else? Working capital. All right. So now we have capital expenditures, so we got to take that out. There's 5340, so quite a lot of capex. So if you take the capex out, you got about 20 billion of cash flow. So now 20 billion times 4, of course, is 80 billion. So we do that math again, and it's 23 times earnings. Now that's pretty attractive. 23 times earnings for such a rapid grower, if Microsoft, of course, can continue to grow rapidly, which by all means it looks like they can. It's actually quite an attractive stock. So let's see. Again, I wouldn't advocate you always think you should do more research on a stock before you invest it, but that's, like I said, sort of my method. Of course, the second I bought the stock market dropped. Let's see here. Microsoft. So let's say we want to buy 5 shares of Microsoft. That's not very much. Just how much is that? $1,000. let's see. So right now it's the pre-market, so the market's kind of all over the place. Let's pick the middle price. Press buy. We got to select fill outside of regular trading hours, and there we go. It's in the middle between the bid and the ask. The bid price is where buyers will buy. The ask price is where sellers will sell. So I bid at 250.44, which is roughly in the middle of those two. If you can't see it, let me shrink my screen a little bit. Maybe come in the lower bottom here or something. I don't know.
Order filled.
There you go. So my order got filled. And this like, I don't like this resolution actually. Let me see if I can fix this. Be more of a square. Yeah, 340 by 340. Let's try that. There you go. Alright, so I'll put that maybe in the corner. Just try to be mindful. Alright, thanks everyone for coming, by the way. So I bought some Microsoft there, right in the middle. This is the account I'm using. It's a very small account, only $50,000. But I'm using it, I put $50,000 in here so I could trade against Matt Kors, who I guess is, let's go troll him a little bit. What do you guys think? Matt Kors is some bozo. There it is.
Up 60%. It's where I post my trades, my thoughts. You can post your trades, your thoughts. It's just kind of the community that we're building up outside of the live stream, where if you have questions, if you just want to share your opinions or your outlook on certain things, it is a cool place to be. So just wanted to quickly point that out there. And once again, it's free. Just put in the code PAYDAY. And this time around, we're going to be doing a little bit of merch giveaway as well with it to celebrate the fact that I am now an old man. Let's talk about the market. So yesterday, the market dropped, rallied throughout the day, started to sell off right at the end. And as I kind of pointed out in my update video yesterday, I thought this move to the upside, let's say in the SPY from 375 to 382, was absolute bullshit. Absolute bullshit. In fact, that's what this entire video is about.
Yeah, real
right here, the warning.
I
in 22 minutes explained to everyone how I was like, this I really don't think is gonna hold. If I'm being completely forthcoming with all of you, I'm surprised how quickly it sold off. But look at this retraction in the dollar. If the dollar keeps pushing, I think this will keep coming down. The producer price index information came out this morning right here. Yesterday, we got this.
Okay, so anyway. Microsoft could be putting in a bottom. Yeah, like I said, I'm not going to try to entertain. I mean, I'll entertain when I can, but, you know, my goal isn't to jump up and down, scream loudly, try to, like, entertain you with this fake persona. I'm giving you the real me. Sometimes it'll be entertaining. Sometimes I'll yell at somebody. I might have, like, an intern I'm going to be live streaming with. Start screaming at him, "What are you doing?" I'm not going to do that to a grown man or a grown woman. It'd be too embarrassing, but maybe I should. I don't know. That's what Jim Cramer used to do to guys like me and the other workers. "What are you doing, idiot? Fucking idiot." Oh, relax, Jim. Don't fucking talk to me. Guy was crazy, man. But, you know, he was very, very, very smart investor. People kind of sleep on him now that he's retired. He's been retired for like 20 years. He's a trader, not an investor, really. He's a very, very good trader. Trading and investing are two very different things. But he's a super smart guy. Like, people think he's not because he's on TV. But the guy went to Harvard and Harvard Law, so I don't know. I wasn't smart enough to get into Harvard and Harvard Law. And then he worked at Goldman Sachs, which I was never smart enough to work at Goldman Sachs. Being a little tongue-in-cheek about the smart enough, but the point is the guy's very accomplished and intelligent. And he made a lot of money. He made a shit ton of money, actually, as a hedge fund manager. But that was 20 years ago, right? So, and on TV, the thing about trading is that you can be right about 50% of the time and still be like a super successful investor. I gotta get some scheduling done today. I have to run to the office pretty soon, actually. Let's see. You want me to do just chatting? On YouTube or on Twitch? I guess Twitch. I don't even know if I could do that on YouTube. Twitch. Alright, let me close the GSK stuff. No way, he's supposed to be in jail. Well, I'm not. How about that? Why don't you call him up, tell him I'm supposed to be in jail. Tell him. What, you police? Police or something? You proud to be police? Snitch. Fucking snitch, rat bastard. We don't do that we're around here. We don't fucking do that. Kramer is Kramer with a C. C-R-A-M-E-R. C-R-A-M-E-R. Yeah, Kramer is super smart. He can be a very nice guy too, believe it or not. Very generous. But he just, he took that job really seriously, which of course you should, right? And he worked his ass off. He'd be up at 4 a.m. screaming into the phone. Even if he lost 50 or 100,000 trading, and we were managing 300 million, he would be pissed off. Market's coming down a little bit more. Doesn't look good, buddy. Doesn't look good. I have a friend. I was short earlier this morning. I have a friend convinced me to go long, so I went long. Of course, now the second I went long, the market went down. All right. We're going to do some shorting as well. Kramer is no longer a full-time trader. He hasn't been a full-time trader in 20 years. So say what you will about his TV show, but television is entertainment, not trading.
Especially the very...
Right? There's a big, big, big difference between TV and real-life stock trading, right? So it's just something to keep in mind. When he was a trader, he was really, really good. What he says on TV, it doesn't count because he's not trading, right? if Kramer traded today, he would be just as good as he was before. But he's older. It's a young person's game to some extent. It requires a lot of energy, waking up in the morning, etc. So he enjoys doing the television thing, right? But I don't think he's an inverse indicator. I just think he's a non-indicator. It doesn't mean you can't learn from him. And again, I don't talk to him anymore. So it's been like many years since I talked to him. So I have no reason to say. I'm just telling you the truth. Anyway, let's keep working here. Work. Yeah, listen, when he was trading, he was just like super sharp. Like you couldn't put anything past him, you know? Productivity and business processes. I normally don't trade at all, actually. I'm a private equity guy. But I just wanted to put this Matt Coors idiot put my money where my mouth is and see if I can. All right. Let's see here. Yep, market keeps dropping. We're down a little on that Microsoft. We're down a little on that SPY. I bet there will be a reversal. It's hard for me to understand. Like, I think the market's sort of priced in the inflation at this point. Nobody should be surprised by it. So, like, that's kind of the right time to buy. But just for the really short term, the thing about trading really rapidly is your probability of being right is about 50-50. And that's like some of the best traders I've ever seen. So you're like 55 or 52% right. So it's like blackjack or poker. It's not easy. You gotta grind really carefully. And just like blackjack or poker specifically, blackjack's kind of a loser's game. Just like those games, and the markets, make no mistake, a game just like those games. At least trading is a game. Okay, let's see here. Sorry about that interruption, just doing some scheduling. 13522, 19051. We all know Microsoft's cloud business has grown very rapidly. I guess gaming is in personal computing, or more personal computing, so the Activision acquisition will speed growth up there a little bit. It's obviously not organic growth, but it's growth nevertheless. Let's see, earnings release pages. I need to go to old earnings releases, okay. Maybe it's going to be here. Earnings release pages, press release. Okay, now I need to go back a quarter. Cool. I mean, you would expect Microsoft to ideally have a good... if any company should have a decent system, it should be Microsoft, right? I remember when it was msft.com, but they changed it. Alright, so not much going on in the market. It's actually kind of dull. I do think you'll get this bounce back, maybe up to 380. We'll see. Again, not used to trading such a small amount. So there's some commission differences, I believe. For example, I bought this at 250.44. You can see the average price is 250.64 because of 20 cents of commission. But anyway, I'm just doing this for the Matt Coors. No, Microsoft has not closed the Activision deal yet. So take a look. Activision is still publicly traded. What's up, Giant Burrito? Cut losses as fast as you can. No pregnancies yet. Hopefully soon. I don't use technical analysis now. Alright, let me... Yeah, I was watching the market when during Corona. Anyway, so now that our model is set up for Q3, it's really easy to plug and chug for Q2. That's what we call plugging and chugging in my industry. Alright, 6331. Look how easy that was. Everything just falls into place because the formulas are all there. It's kind of a thing of beauty, to be honest. Alright, so now you see revenue growth was 20% 2 quarters ago. Again, there's some worry that a lot of this growth was pandemic fueled and not sustainable. Alright, so that's all it takes. Now you got 2 quarters in there. Again, you still want to get the balance sheet, which usually for a lot of other companies doesn't matter as much, but for Microsoft they'll explain kind of an advanced concept, but it actually matters quite a lot. Microsoft, every software company has something called deferred revenue, which is a little bit, like I said, a little bit of an advanced concept. Accounting is a very tricky thing in general. When you do accounting, what counts as revenue and how exactly you think about that from an accounting perspective is very different from how you naturally think about it. Like, what's so special about selling a product, right? It's actually very tricky how to determine if a product has actually been sold and when do you book it as revenue. So I'll give you a quick example. You know, if you had a lemonade stand or a bookstore, right? For you, revenue, let's go here real quick. this is, say, your lemonade stand, and instead of billions of dollars, this is just the amount of dollars, right? So you sold $51,000 at your retail store, your coffee shop, whatever you want to call it, lemonade stand. $51,000 of revenue. Then you sold $49,000 of revenue the next quarter, et cetera, et cetera. And basically, the revenue for you as a business owner is the revenue for you as a business owner is the revenue for you as a business owner is just basically the revenue that the customer pays you, right? Just gives you the money. But revenue recognition is actually far more complicated than that in the business world, right? So revenue recognition, if you want to learn more about this, you can, it's a good website, see a lot of ads up there, but FASB is the Financial Accounting Standards Board. They actually issue the standards. This is a little probably too complicated. But yeah, RevRec is what we call it in the industry. So you might want to watch some YouTubes on how revenue recognition works.
Due to its size, revenue is the single most important line item in the income statement of most companies.
Yeah, so how does
revenue when or as a performance obligation is satisfied?
Yeah, so look how complicated this is, right? Whereas if you had a retail store,
the performance obligation made it.
You might say, okay, well, I don't know, I sold the guy the product for $20, I booked my revenue at $20, right? And you keep doing that until you get your revenue for the quarter, which in this case, say, was $50,000, $51,728. It does not work that way in the business world. Very complicated, very different. So you got to think about that a little bit differently. So anyway, I don't want to get into too much detail on revenue recognition, but deferred revenue is kind of like revenue that hasn't been recognized yet, but it's still money that they received. So it's very, very interesting way to book revenue. So a little complicated, not going to go through it right now. But you know, something to keep in the back of your mind. So balance sheet, very important for Microsoft. More important than normally just looking at debt and equity. I'm sorry, debt and cash. Let's keep going here. Taxes. That reminds me, I gotta call my accountants. IRS owes me a little more than $1 million. They're very slow in paying. Pain in the ass, really. All right, lease. Where are my leases? 10774. Yeah, the IRS is always quick to take your money when you owe them, but when they owe you, they what? Who? I don't know him. Who? Shkreli? Nah. Isn't that how it always is? Yeah, I don't follow financials. They're very unusual companies. Yeah, all software companies actually, deferred revenue is quite important because recognizing revenue as a software company is a little bit hellacious. So you have long-term performance obligations. But again, I don't want to get into it too much. It's I don't want to say complicated, but it's definitely dry. Not that I'm trying to be, as I said, I'm going to give you what I do without any extra entertainment, without any extra pizzazz, without, I mean, I could sit here and raise my voice and scream and make this interesting, but you know, one, it's an insulting to the profession, it's insulting to me. Two, it's it would be lying, you know, which is something I don't do, despite having gone to prison for it. So if it's too boring, find another place, you know, it'd be more exciting, but I think a lot less informative. screw this up? No, I don't think so. Good. Let me do free cash flow here. Free cash flow is sort of a self-defined concept. Mainly, it's cash flow from operations minus capex. In this case, it's plus capex because it's a negative number. But it looks like we got very different situation picture for Q1. The December quarter usually is a cash-consuming quarter. So anyway, you've got 28,661. So that's 57 billion, say, for annualized. Yeah, 32 times, not cheap at all. Again, we need to get a full year kind of estimate. So deferred revenue. Somebody gives you an IOU in exchange for goods. No, not quite. Not quite. In fact, you're 100% wrong. Shouldn't spread misinformation. Should not spread misinformation. I did take Effexor in jail. In fact, I hope I have some right here. I do. Yeah, so revenue. I guess the first thing to recognize about revenue, no pun intended, one thing about revenue is it's completely independent of whether or not you've collected the money, which is, again, is not the way we normally think of that, right? So let's go back to our t-shirt store. You're selling t-shirts in New York City, popular t-shirts called Supreme brand t-shirts. Your t-shirt brand's called D's. So anyway, D's t-shirts. And you sold $49,360 of D's t-shirts because you gave people $20 at a time, $49,000 worth of D's t-shirts, right? The problem is, in the business world, and you got paid $49,000 in cash. The problem is in the business world, you book revenue when you invoice and title transfers, not when you get collections. That's down here. That's called accounts receivable. That's completely different and separate concept. So just something to keep in mind there. GAAP and non-GAAP is a very good good conversation to have. We'll have that later, though. For Microsoft, it's interesting. GAAP and non-GAAP are the same thing. So anyway, some thought wants me to prove that I'm real on Snapchat. Kenzie is her name. Well, Thotty, I'm about to patrol you. Yeah. I don't, like I said, I'm not here to entertain you and like look good or, like what do I care? It's not my job. My job is to get this money, get this shmoney. You're here for me looking good. There's other channels for that. Go watch Amaranth. Pigeon almost flew into here. 400 viewers. Wow, I think that's a record for me. Thanks for watching, guys. It's really nice of you. So anyway, looking at Microsoft real quick. Let's add one more quarter, and then we can look at Google or Apple or something. Whatever you guys want. Do a poll at your convenience. Oh, got one more thing to fill out. Okay, what else? Should probably look at the margins for each of these businesses separately, but I'm not trying to get into too much detail right now, so let's leave that there. Let's go to Q1 and wrap this up. All right. Yeah, you know, when you're investing, you want to know what you're buying, right? Oh man, the market's crapping out. Ah, I told you that story. I'm not gonna let my friend forgive this. The market's open, by the way. I was short earlier. I thought we kind of puked during the opening. So I shorted a little bit, and my friend texted me, and he was like, "No, man, I think the market's going up." So I got out of the short and went long, and now the market went down as soon as I went long. So, and our little Microsoft investment is not going well either. So I just made this account just so you guys know I'm getting into a trading competition. It starts Monday with this guy Matt Kors. So he challenged me. So you know how I am, stubborn. I'm not even a trader, really. I'm an investor. But he challenged me, so I decided to show him that I'm going to...
32, which is just over 100% gain to also cover commissions. And that's my reasoning for it. It looks like it's going to get filled. We're right now at a 72% gain.
Bearish.
If we hit 370...
Look at how everybody's bearish. 73% of his viewers who are all idiots. I'm kidding. Are bearish, right? Red. So that means it's going to go green. 28%. Only 28% are saying green. So that's what's going to happen. Because I'm even more convinced now. I switched my position not because I just listened to my friend, but I listened to him and I was like, yeah, you're probably right, actually. So the fact that everybody's bearish is usually the best time to buy. So let's buy some more. What do you guys think? Yeah, let's buy some more. Let's go crazy. I'm kidding. Let's not go crazy. Let's double the position. Usually trading, when you trade, doubling down is like the worst thing you can do. It's usually really stupid. But in this case, we're going to try it once. And then what we're going to do is if it drops below a certain level, we're going to get out. So let's say 372.78 is the last buy. So let's say 372 flat, we're get out. Maybe 372. Let's see. You know what? Let's try this. Let's go to Excel. I'm just going to use this as a scratch pad real quick down here. Let's say 372 times 0.995. So that's a loss of 50 basis points. So that would be 370. All right, at 370, we're just going to get out. 372 even Steven is probably too small, but 370 will get out. And the idea behind that is sometimes called the stop loss. The idea is that if you make a position and you're wrong, at some point you should just give up and admit that you're wrong. So we're going to set that point ahead of time, and we're not going to change that. So at 370, we're out no matter what. And I'm not going to actually program that in, which you could do. You could just click and create stop loss. But we're just gonna watch it manually. But it's better when you click it in and you force it to sell you out if you lose. So anyway, we're not gonna watch that too closely. I think traders who watch their screens too closely are, I mean, it's not a bad thing to watch your screens. It's just if you're a day trader or something like that, you kind of have to. But if you're a more cerebral, slow investor, that's different. So anyway, let's get back to Microsoft real quick. Yes, I'd like to see this document. Thank you. Like I said, you can just drop all these things in really easily now that you built the model. Everything will flow quite quickly. In fact, if I did this side by side, you'd see how fast I could do this. It's remarkably quick. And if you use the number pad on your computer, you can really do a lot of damage. I had a keyboard that didn't have a number pad, so I changed it out for this one. But you can see that took about 5 seconds, would you say? You want to time it? Ready, set, go. I'm not going to try to go fast on purpose, but because you're supposed to actually kind of go slow and look at the numbers and try to understand them as you're typing them in. That's part of the reason I do this and I don't try any automated thing. Also, there would be no way to do it in an automated way, but that's a whole other story. But yeah, you can see, okay, so that's the end of the time. So I don't think that was even 30 seconds. And so 22% growth in Q1, then 20% growth in Q2, then 18% growth in Q3. What do you notice? It's just kind of slowing down is the trend. But that's still very, very rapid growth for such a large amount of revenue. It's hard to grow businesses a hundredth of this size. So 50 billion in revenue a quarter is quite hard to grow. So really impressive growth by Microsoft. And none of this is really fueled by any acquisitions. It's kind of impressive. All right, let's go to the balance sheet real quick. Same concept. It's a little less quick because of most of the lines are inputable or values, not formulas. More technical, I guess. So there's all kinds of analysis we could do with inventories and accounts receivable, but we're not going to. Not that important right now. PP&E, one of the most important concepts I would say in business, property, plant, and equipment. Companies call it different things, but I call it PP&E, property, plant, and equipment. All right, and that's it for the asset side of the balance sheet. Now it has to balance, that's why it's called a balance sheet. It's to balance with the other side, with the liability side. These are also balances of accounts, so you could think of it as that too. It's not just the balance sheet because it balances. All right, there's the debt, compensation, taxes. There's a bunch of tax lines, so you got to get them all. There's 1, 6272. There's 2, 25715. And then there's deferred income taxes. There we go. Now there's deferred revenue, 2550, 38,465, the all-important deferred revenue. Actually looks like deferred revenue just dropped over the last few quarters, which is not good for Microsoft at all. That might be seasonal, but that's not good. Maybe I should sell my stock. Let's do a little more. Other current liabilities, 10,816. Leases, 10,050. 14,346. 151,978. Okay, balance sheet balances. You can see the liabilities and shareholder equity equals assets. If you don't know what that is, it's a good time to learn. Very important stuff. Now let's go to the cash flow statement. Some people say the cash flow statement is the most important statement. Again, it's a lot of people think of the cash flow statement is much more. Now here's revenue recognition goes out the window. This is all about how much cash came in your doors. So this is like if you had that bookstore or that t-shirt store, this is exactly kind of how you would think about the business, where it's the cash you received is what counts, not the accounting gibberish. And which one's more important, you might say? Well, they're both important. The accounting system makes sense. It's not just made up and a waste of time. It does make sense. It's just a matter of kind of understanding both of them. All right, so let's look at this. This is called capital expenditure, very important concept. CapEx is anytime you buy some PP&E, that's what CapEx is. All right, there's an acquisition here. Every quarter, Microsoft buys some company. Usually quite a bit of them, quite a few of them. All right, so we got CFFI, and now we're going to do CFFF. Repayments of debt. Common stock issued. Common stock repurchased. Dividends paid. 72. Okay. 73. Cool. Everything fit. So again, I'm going to do this not FX free cash flow. So I'm going to take the, you know what, I could just take the average of these three and then multiply by 4, and I get 63 billion. So again, I got 63 billion. So 29 times enterprise value. It's not that attractive, even if it is growing 20%, because let's take that by 20%. So for next year, oops, let's do that. So that's 24 times kind of for next year. It's still a fast grower, but let's say that the growth declines perhaps to say 10%. Talking about 22 times 2 years from now. Microsoft's kind of like this indestructible fortress of profit. It's just not that exciting of a stock to own. I think those stocks we want to have in our portfolio kind of want to be exciting stocks. So let's sell this Microsoft. And I want to show you something. When we sell this Microsoft, click sell. You know, I'm just going to do a market order. It's only 5 shares, so who cares? And let's see, the market is around 248, 80 something. So we just sell.
Order partially filled.
And
Order filled.
It got filled at 248.83. Maybe not the best execution, but regardless, so we lost $23 on Microsoft. Or no, there should be some realized loss. Okay, we lost $11 and 30 cents, it looks like.